PPS recently conducted its Student Confidence Index, where we surveyed 2,500 students on all matters relating to financial services. Now, for financial planning specifically, we asked them some questions to get a sense of where they see financial planning going. And it was quite staggering to see that only 91% of the students we asked believed that they would prefer more access to financial planning early in life, that being school and at university. Some of the other findings that were interesting from the confidence index was that only 37% of students felt that they had a great understanding of matters relating to financial planning. So that being things like budgeting, debt management, things like retirement planning, risk planning. That's a very small percentage. So 2/3 of our students, of our future professional market, really don't have a firm understanding of how to plan for their financial futures. One of the reasons why it's important for students to have a firm understanding about financial planning is because the sooner you start engaging with these concepts, the better for you. I think often we, students and many of our other members, think that they can wait longer to consider financial planning. And the reason why it makes sense to talk to a financial planner sooner rather than later is because the sooner you start, the bigger the benefits at the end. So we've all heard about the benefits of compounding interest being the eighth wonder of the world, and starting to save at 25 versus 30 essentially doubles your retirement capital. Those things are all true. So the sooner we can get people engaging with their financial lives, the better. Financial planning is completely evolving. What we've seen from a regulatory perspective, but also from a consumer behavior perspective, is that financial planning is much more focused on client outcomes. And that doesn't just apply from a product development perspective, it also applies to what we offer people throughout their different stages of life. So for students specifically, we've started catering the things that students would be interested in. And when we look at students, it's no use really talking to a student about legacy-related issues or even some of the other insurance-based products, when really their focus is that's not really that required at that specific stage of their lives. So from a student perspective, there's a number of things that a good financial planner can help with. They can help you access the markets in a cost-effective way using all kinds of instruments that pool people's monies together. They can help you look at your entire financial situation, which gives you access to things like short-term insurance. When you start thinking of working, helps you choose the right medical aid fund, gives you some access about how to protect your income when you do start working. So there's all sorts of things that the students could benefit from early on. And I guess the key reason why we are so adamant that students should access financial planning sooner rather than later is because the sooner you start, the more levers you have to pull when things may go wrong. So if you're late in life and you haven't saved enough, you kind of run out of levers. But when you're young, there's still a number of things that you can do. So really the menu for a student is a lot bigger than a menu would be for, say, someone who's more advanced in life.